Hey guys, how's it going? I hope you guys have been having a great weekend. So the week ahead, we've got some phenomenal pairs on watch this week. A mixture between yen, USD, Aussie CAD, and then thrown in the Germany 40 and also platinum, which are both looking phenomenal. Just wanted to kind of point out with the similarities between the trades I'm going to be looking at this week. Pretty much amongst all of the top 6 additional pairs and the 2 additional soft watch pairs I've got on there, we are looking at pretty much the first flag and the second flag continuation, which will also be reflected in the Notion document, which will be attached to the video. If you're on Discord, you'll find it in the link below the video, and if you're watching it on YouTube, you'll find it in the YouTube description. So yeah, overall the week's looking phenomenal. The positioning for it is looking also very good. A lot of patience required for the additional pairs. However, for the top 6, it does look like we've already got a level of confirmation, and we're just kind of looking for that final little cherry on top. High time frame to lower time frame, it's looking phenomenal across the board. So guys, I look forward to it. I hope you guys enjoyed the video, and I'll catch you in the next one. Starting off with the DXY. So DXY is looking pretty good for this week, I'll be honest with you. One of the nice things about this is, look, we're basically in this corrective channel, and the thing about it is we don't necessarily know if we're ready to go just yet. Despite the fact that this was looking phenomenal, there was enough room to manage this particular trade into here. It didn't really quite play out, and I think that might potentially be a signal from the market that, but this isn't really the sequence just yet. So we need to see a little bit more commitment. I think any trade below this area here would be solid. This would be a clear sequence to the downside. That would be phenomenal. However, at the moment, we're still within this corrective channel. A lot can happen. This can get corrective. It can tap into here, it can develop, still carry on within here, and next thing you know, we're all the way trading back up here, and the positioning within here just wasn't what we thought it would be. So I would be keeping that in mind when I am looking at the US dollar related pairs this week. But essentially, main focus for this is just to basically see this commit through as we approach this low here now, because I think it's a bit late to just really be jumping into a trade just here right now. What I will be waiting to see is how we react to this low. If we get clear continuation to low, it's a no-brainer. We can get positioned, we can get short. Otherwise, pull back up, continuation, and then we just see how that moves. We'll just have to really wait here and then. There could even be a nice insurance entry in there to then go long, and we can see the trade within here and go long. Obviously, I won't be taking a trade on the DXY. However, I will be cross-correlating it with USD related pairs. Now jumping straight into my top 6, starting with Aussie Yen. This is looking phenomenal for this week ahead. So starting with the daily time frame, going with the traditional top-down analysis, what we're seeing over here is the potential for this larger pattern, which is the ascending channel. Not the best middle section in my opinion. However, what we do know about these yen pairs, we do tend to correctively keep moving higher, so we have to be very much aware of that. What I do like about this is that we do have that expanding within this, where we could get a little bit of a short sequence before we go long, which I think is also a very nice play. So value area, tapped into the value area already. Would have liked to see a break above and push back in, but we don't always necessarily need it. We didn't get the clearest of sequence to the downside in terms of a middle section. However, what we do have is push up, larger corrective middle section, and then another push to the upside. So is this accumulation to get a move to the upside? Moving into the 4, it gets a little bit more clear here when we do see this expanding. We can then see that this isn't your typical sort of sequence in terms of a reversal. So in no means am I sold on this trade being the trade, because we could get the insurance entry from here, or we could push up higher, tap in above here, push back in, and then get a later in the week trade there as well. So easily I could be moving this into a trade which may not shape up early week. Keeping it for what it is right now, and basically just seeing how price has got there. It's essentially just corrective. This is one big corrective squeeze, but in there I was able to find 3 significant equal spacing touches, and within that I'm looking for a clear insurance entry, so a push away, breaking out of this sort of corrective squeeze here, giving me an insurance entry to then refine that and take an entry within there. And I'm just keeping it as simple as that. Otherwise, if I don't get that, I'm more than happy to wait, let this develop, take a second flag, or more than likely let this develop and push up higher, break those highs, which are what we're really looking at, because either way, if I take this entry, I'm going to have to be aggressive with it regardless, because we do have the value area sitting above it. So I would prefer us to break above that value area and then push back in, or create continuation and continue moving to the upside. The next one I'm going to be looking at is CAD Yen. So CAD Yen is one that I really do like as well. Structurally, it's a little bit more preferred than AJ because there's less subjectivity to it. And what I mean by that is, if you look at it from the daily perspective once again, you can see that we're essentially breaking above the daily value area. And because of that fact alone, we have to look at how we broke above it. And then we go into the 4 hour and we can see that there was an element of a 1, 2, 3, and there was a little bit of a near miss down here, which you can see very closely there, where this can easily gravitate and come back in, fill that little near miss gap, which is not always necessarily required, but if I did look at this, it kind of wicked towards it and then we pulled away. And then, yeah, we can see if we just get continuation and continue moving to the downside. So I want to take the lowest risk possible on this position without positioning myself in a place where this could correctively just continue moving to the upside. So going to the 1 hour, what I can see here is that we've correctively squeezed into the high and we are correctively moving away, but it doesn't really necessarily matter right now. We just want to see a clear follow through, so a push below pretty much this area here. So looking at it there, I just want to see a push below this line here and then continuation below there, and I'm more than happy to get involved on that move and then position myself, and I'll have more than enough to protect myself to the bottom of the pattern and then all the way to the low, and then see if we do get further continuation to the downside. And that's basically what I'm going to be looking for CAD Yen. And then obviously, like I said, if we don't get that, we get the large continuation and move to the upside. EJ, very similar, but I would say that CJ and EJ are more preferred than AJ in my opinion. The reason for that is just because of the structure and the development. However, the only thing with EJ is we are in a higher time frame bull trend. And what we know about this is we've moved correctively, but within there we can get a lot of intraday trades. So we might see a short-term sell for us to then create continuation to move higher. And that's what I'm looking to take advantage of. So looking at it on the daily, what I'm seeing over here is that we are in a corrective move to the upside. We have a clear target zone and a higher time frame target zone above it, which doesn't necessarily have to be focused on right now. We want to put our main focus on where price is right now. So going back to the 4 hour, we can see that we do have this 1, 2, 3 drives. And with that 3 drives, there is a middle section to it as well, which is also very nice. So adding those confluences together, I'm essentially looking to play this very simply. We have the clear value area here. We have a reversal pattern formulating of a 1, 2, 3. We're now hovering on the override. On or before, if we break above, break back in, great. If we reject from here, great. Doesn't really matter. I'm just looking for a clear follow through to the downside, continuation, and then looking to get short with that. And then to play this range as a minimum, understanding that this is the strongest point. So as you can see, I'll have around about 4.5% managed till there, maybe a little bit more, a little bit less, depending on position sizing and risk. And then playing 90% raw of this. And then if we do get continuation of follow through, then this could turn into a much bigger trade. The next one I'll be looking at is Aussie US dollar. Now in correlation with the DXY, this is one of my most preferred ones over the US dollar pairs so far. I had to filter some out like NU and so forth, but to be honest, I like this because of the overall high time frame sequence. As you can see from a sequential view, we can see that we have the clear tap of this value area with a near miss, but we had the follow through, we had a strong push, continuation, which was a little bit messier, and then we had another push, continuation, and then now we're in another phase of a correction. But the nice thing about it is when we go to the 4 hour, we can then see that there is some really good elements to it. So we can see that we had a small near miss gap there which got filled and we rejected on it, and essentially just creating this massive corrective price action here. But in many ways we've just kind of created that V shape, which is also very nice. So when I go into the 1 hour, what I can see over here is that we did correctively get there. Despite the fact that the middle section on here is not the nicest in the world, we did kind of have this overall larger time frame picture and then sequencing in there as well. So what I'm looking in here for is we have our first tight little smaller flag, which you could refine on the 5, but it's not always necessary because it is much higher risk. I do want to see a bit more of a follow through, a continuation flag on the 15, ideally with an element of a 1, 2, 3. I'm more than happy to take the reduced risk because in terms of risk reward, it still would be pretty much enough and I could protect myself, whatever. And yeah, essentially that's where I would want to be. If I get the risk, the reduced risk, it's no problem. Second continuation in my opinion, if you take the AFT into consideration. And then yeah, that's it basically. That's how I'll be getting positioned, and I'll manage into this point here. No, understanding there could be a bit of a larger continuation in these areas, so I wouldn't want to be too aggressive and then playing it to the low. You could play the 80% of this range, but really and truly when you do look at it on the high time frame, if the DXY then starts to go aggressively bullish, you'd be positioned very well within sequence to then take this into a much lower price. So that's basically my outlook on Aussie US dollar. Then I've got GBP USD. GBP USD is also one that I really do like, because for the main reason that when I do look at it on the daily, it does look very corrective and messy, and from this perspective you kind of would want to write it off straight away and be like, it's not really in the best area possible. Well, when you do go into the 4 hour and you do look at it a bit closer, you can see, okay, fine, we had the value area down here, we had the near miss, we then aggressively pushed away, but we didn't quite complete. We pulled back, but we didn't get any more commitment. When we did pull back, we pulled back, but we didn't really tap into anything significant, just this little point over here. And then we rejected, created continuation and pushed down again. And then if I pull this over here, we can see that we came back 50% off the move, but we didn't close above. So then I go back into the 1 hour and have a little close look at it. We created a little bit of a correction over here. We pushed down and correctively came back into it. And with the multiple near misses into this as well, we pushed up, we retraced with a nice 1 hour retrace, but now I'm looking for that 15-minute flag with the 5 refinement, or the 15 if it's applicable there as well. And yeah, essentially just get myself positioned there, understanding that a reduced risk entry would also be good, but I would be looking for the 3-touch 15, bang, straight in there, and I'm more than happy with that. Ideally I would be looking for that for London session, but I know that this could shape up during Asian session, so this would be something that I would be much more aware of. But going into London session, it will be second continuation, so a push down, any flag down there would be more than enough for me, and I'll be looking to take that continuation lower. And yeah, that's basically it. Next one I'll be looking at is Euro US dollar. Euro US dollar is also one that I think is phenomenal. So if we look at it from a higher time frame perspective, just like the DXY, it is corrective. We've correctively moved into this area here. We sold off from not the highest, let's call it a magnet point up here, would have been the ideal place to sell off from, but we sold off from a sort of a hook point within this pool, and we did react from here, and as we reacted from here, we did have a decent level of corrective sequences to the downside. So then as we look at it on the 4, we can then see that, is this just a part of this corrective sequence because it is within that channel, or are we likely to reverse from here? To be honest, we can't really tell yet without some more data. This is going to be a 2-touch, which would also be lowering the confluence towards the sell, but the thing about it is now we have to kind of see what else we can have within it to see if we can get the short. So I am going to be going to the 1 hour to be looking for a structured approach into it, and then if we can get the structured approach into that level of interest here, and we don't push much further away from it and we reject, get a clear i.e. insurance entry, and then we can get the entry within it, more than happy with the reduced risk, the risk entry. I have to really evaluate it very closer, and then essentially see if we can get that and play that to the range, to the low, and then see if we do come up for the 3-touch or we continue to the downside. Likely looking at the DXY, if we do come down here, we could just sell off and continue going. So that's basically what I am going to be looking at. And then, you know, just to draw this on for visuals, we can see that we are trading into the, that trend. And at this point in time, there's nowhere to dictate that we are going to reverse. We need to see something significant, and in order for us to see that reversal come to reality, we need to see a solid push up, a continuation, and then with that we can go to the upside, and then we can understand, okay, that makes sense now. We've broken out of that corrective channel to the downside, we've broken out impulsively, we've created continuation, and now we're moving to the upside. And going into the additional pairs, so we have Euro GBP. Obviously with my additional pairs, they do pretty much indicate that it needs more development, so a lot can change between now and then. We have the override over here, which I'm not too concerned about. I do want to see a follow through, but if we do tap into the override and push away and create continuation, then I will be looking at that as well. I just want to make that clear, you know, that's something that is something that I would look at. But what I am really looking at, and I'll just go into the daily on this, is the sequence. So we can see over here on a higher time frame perspective that it's not the cleanest. Like, we can't see that this is the most cleanest piece of price action, but what we can see, and will be much more clear on the 4 hour, is that we did have a near miss to this low here. So considering that we had all of this momentum move to the downside, we would have ideally been looking for a clear push below, breaking through it and pulling back up if we were going to be moving to the upside, which gives me more of a reason to be looking for shorts. Looking at the 4 hour, what I do like about this is that as we're coming into that low, we've created an expanding, so it makes more sense for that near miss. I then see that this price action towards the downside has overall been corrective, where now I'm just looking for a clear entry to get short. I'm not looking for any quick entry over here or anything. I want to see some structure within this expanding to then take advantage of it, but then I do want to lower the risk because of the subjectivity of all of these price points to the left. I want to be looking for an insurance entry to mitigate against price just kind of wicking and moving towards one of them. Going to the 1 hour, what I do like about this as well is that we have this expanding over here, very clear. The middle section is also quite nice once you do kind of get granular with it, and then we moved up impulsively, but now we started to move correctively and hopefully in the form of structure. So as we get this approach here, what I will be looking at is, can we tap into this area over here and then insurance entry from it? So we push away, heavy bodied candle action, and then we create a nice continuation, and first flag, second flag acting as the hover. Those would be my go-to. I wouldn't take both, but I'll definitely take one. If I miss them, it is what it is. I'll just wait for further continuation, which could be a little bit larger, but this could be a decent sequence into that low alone, or we can see some pretty impulsive price action. The next one I'm looking at is Euro New Zealand. Now, Euro New Zealand is also a little bit of an advanced play in my opinion. So going to the daily, we can actually see once again that sequence wise, we've tapped into this area of interest, we've rejected, we pulled back, we didn't get the commitment to move to the upside, and we rejected again. Fine. It was a little bit messy, but we're basically still moving. And what I do like about this as well is that even though we're moving down correctively to the downside, just pop into the 4. Looking at the 4, you can see that we are in a corrective channel to the downside, right? And this middle section is technically still within that corrective section. So if we impulsively break out, we could then technically be breaking out of this massive corrective squeeze and moving to the upside. So to mitigate against that, I don't want to take the first continuation, because the reason for it is, even if we break above and push back in, this could still form into a continuation to move to the upside because we've broken out of all of this. So this is why I would say it's a little bit more advanced, because what you can see here is the corrective squeeze, the near miss, and then you can see this hovering just below the break of this, accumulating volume, and then it pushes out impulsively, creates continuation and goes. So I don't want to get stuck in that sort of trap, and the way I'm going to kind of play against it is I want to play this corrective structure out of this to play the short. So I want to see that break above, push back in, first continuation, adding more confluence towards the second continuation to then go short. But understanding that this can still become more complex and this can be a difficult trade to understand at first, and I wouldn't expect a beginner to take it, but I think someone who's a little bit more advanced would understand this trade and understand the reasoning behind it. But once again, this is also a very situational position, because you would be playing this trade essentially into this low, but understanding because you have the near miss here, you have the near miss here, this could then move from a potential 6% trade all the way down to a 10% trade. And then you zoom back out to the daily, and then you can see that, okay, fine, we're trading into that low now, etc. We could essentially be moving lower. So you're basically looking at the intraday positioning within here, but then trying to take advantage of the higher time frame as well. GA is also one that I really do like. So I'll tell you why, because what we have over here, and I'll go to the daily quickly. So what we can see here is that on the higher time frame, we do have, well, this is super high, so we don't need to really worry about that right now, but we need to kind of just look at this big range over here. So this range is acting as continuation to the upside, if we do look at it in the sense that we did near miss this, but we've pushed up impulsively, we've come in, we've tested this low, we've rejected with a lot of volume. We are getting a lot of bullish pressure here, but we can still move to the downside, fill that gap, and then move up again. And then this becomes one large continuation to the upside. However, we would have a lack of two tops at that point. What I am looking at here on the range is, what we're really looking at, we're looking at this 3 touch over here. We're looking to play the 90% rule, and then see if this turns into a continuation to move to the upside, which is basically this same pattern we're looking at on the larger picture. So this is kind of just like another level of inception as well, because on the high time frame we can see we had the strong push up, now we're getting that continuation, and then we're looking for the push up again, and we just want to see how that plays. So going to the 1 hour, I am going to be looking for some more confluences here to mitigate against risk. So I want to see a clear 3 touch within here, and then potentially a refined entry to go short. The risk entry is there, but once again it does hold a bit more risk to it, because this structure isn't fully confirmed yet, and it could really get messy. Understanding this pair, probably wouldn't really over forecast this and really worry about it. It's not coming from the greatest of value areas as well. However, we do have a bit of development to it, and it does make sense from a higher time frame perspective for this to play. So positioning, the risk entry is definitely there, and I think it would be evaluated if we had the structured approach, but more than likely taking the insurance entry would be my preferred entry, mainly because I believe that you'd be eliminating a lot of risk due to that, maybe even a reduced risk entry. But like I said, as long as you're not playing with the risk reward too much, you should be okay. So for me, this is not one of my most preferred entries, but if it does shape up, I will reevaluate it once the data is there and I can see how I can take advantage of it. But like I said, it's not the best entry in the world. There's much better pairs on watch, but we just have to see what shapes up and what really meets our trading criteria. Aussie CAD, I think, has really good potential as well. I think looking at the DXY as well, you know, we're seeing a lot of potential across the board, and especially with some of these Aussie pairs for the short, we could really see some really good potential for them. And I think mainly for Aussie CAD, what I do like is that we're coming in with that structured 3 touch. We're coming over here, we've broken through the low, and now we're creating a continuation pattern to the low, and we've got basically a bread and butter setup. So going over here, we can see that we have a clear run to the downside if we can. The sequence has been a little bit corrective, yes, but doesn't necessarily mean that we're going to pull back from this level. It just means that if we get this larger correction, it increases the probability for this to go. And the sequence has been very clean in my opinion. You know, despite it being corrective, it's been quite clean as well. So just looking at it on the hourly now, we can see here that if we can push up, near miss that high, push back in, create a corrective middle section. Doesn't have to be the best middle section in the world or corrective, to be honest, but create a middle section and then come back in, break through that or tap into it, and then get an insurance entry. That would be great. Even if this flag was further down, it'd be even better in my opinion, because you'd have more for follow through. So For me, Aussie CAD is one of my most favorited pairs as well this week. It just really needs that development, and if we get this, it's a no-brainer. I'd be taking that first continuation for sure. If the first is not clean enough, and then the second, and then just really understand the nature of how price is moving and be able to take advantage of that. New Zealand CAD as well kind of works hand in hand with Aussie CAD. I've kind of just put them back to back to see what shapes up. My preferred one is Aussie CAD, but because we're both trading into some value areas, this one would have the additional confluence of a pattern within a pattern within a pattern. So if this does shape up as well, the risk entry could still be there as well. It might be a larger stop, but at the same time, the insurance entry could also be in there, and they're both pretty good for risk reward as well. So I wouldn't and positioning, I wouldn't really be too worried. The only thing with New Zealand CAD is we do have the near miss there, but we tested it multiple times, which I think makes sense why we did get the clear push through. So this larger continuation is building a lot of volume, and I would love to get involved in this. So I think I'm more than happy to get involved in either or. It just really depends structurally and where they're positioned, how I'm going to be getting involved. So that essentially covers my additional pairs, and now I'll just be jumping into my soft watch. Germany 40, and yeah, essentially this one's looking sick, I'll be honest with you. So daily, this one's interesting, just like the S&P 500, expandings into expandings into expandings. We have a near miss, multiple near misses and so forth. There's so much data to play with over here. One thing that I am looking at is just when this starts to really sell, the positioning on the ways to the short is going to be so clear and so nice. So that's the nice thing about this, the commitment we get to the downside. Now, am I necessarily convinced that the short is there? We'll have to wait and see. So from a daily perspective, what we can see is we have this larger expanding, and then we had that corrective push away, we pushed up, and then we started squeezing. We broke through this in a form of a 1, 2, 3, which is also very nice. We can now see that as we're breaking below here, we're now looking for entries. So we've had a nice full-bodied follow through, breaking below all of that. We had a little bit of a pullback, which is completely fine, given that head and shoulders sort of feel to it, but not necessarily the case. And then now we're just looking for continuation. Continuation can be formulated on the 15 and the 5 as well, but I'm not going to be looking at the 5, I'll be looking at the 15 and the 1. And then just taking continuation, I'll be trading into pre-London session onwards, but this can formulate during Asia session, and then we might see continuous forming further continuation, second continuation, and so forth to the downside. So this one is very plain and simple. We're looking at a simple range play to the low, but then we're looking at the larger time frame picture to see if we can get further continuation to the downside. Risk entry on that as well would be more than enough. Positioning on the DAX is perfect. Platinum is looking sick as well, I'll be honest with you, really nice. So what I do like about Platinum is phenomenal price action, if I'm very honest. We've had, multiple larger structures, and then we've had very nice follow-throughs. As we can see, and we focus on this area alone, we had the low of this whole massive corrective area here, creating this range, and we near missed it. What I am looking at now is, because we have that aggressive momentum to the downside, do we kind of go from this point here, or we go from here? And if I go into the 4 hour where it becomes a little bit more clear, what we can see is we have that sort of correction, leaving that reference point, and then we have 3 drives into it with an internal 3 drives there, kind of giving it a pattern within a pattern. Not the cleanest, but if we can get an insurance entry from here, that would be great. Otherwise, if we do just continue pushing to the upside and then we tap into these areas and get an insurance entry, cool, it is what it is. So I will be looking at this closer to really see a continuation. This is a little bit more on the higher risk side. I would say any continuation below this area here would then kind of lower the risk just a little bit more, and it would increase the probability as well. So because you'd have the first continuation, the second one down there. So either or, I'll be looking at this one or the next one below. More than likely going into London session, we may have it below and we might just continue selling off. So I will be waiting for that and being very patient with it, because there is a phenomenal run ahead of us. And just simply trading into this area alone, there could be a pretty decent move ahead of us. Obviously, that's looking at the tightest stop possible. If we did increase that stop a little bit, still gives us a phenomenal risk reward. So platinum's looking phenomenal. The week ahead is looking phenomenal, guys. Smash monk mode month, and I'll catch you guys in next week.